In this video, we will be performing a full multi-time frame technical analysis breakdown on a pair, both from a technical and in order flow perspective. This is what we do in our swing trading series to show you guys exactly what you have to be looking for in the market when it comes to scanning for trading opportunities. And obviously by the end of the video, you will also know exactly what kind of opportunity we can be looking for on the specific pair that we will be analyzing. Now, if you're new to the channel, I'm a top podder on the TRADINGVIEW platform and I share every single day a lot of free analysis and education. So I really do suggest that you subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. The pair that I want to speak about into this video is GBP CAD. Now, why do I want to provide a full breakdown on this pair? Because it is a very interesting pair to follow for a potential trading opportunity, and also it is a very interesting analysis, as you will now see, because you will learn some very important concepts. Now, what we will be doing is, as usual, performing a full breakdown first, starting from the monthly, the weekly, and the daily time frames, analyzing the market from a technical perspective. We will then go and see what we have from a commitment of traders perspective to see what hedge funds are currently doing in the market. And obviously by being able to read what the biggest players in the market are doing, we are able to position ourselves with them and obviously gain an advantage over our competition in the market. And then what we will be doing is also going down on our confirmations and entry time frame, which is the 4 hours, to see what kind of opportunity we can currently be looking for on this pair, if obviously our conditions will be satisfied. So let's start our analysis from the monthly time frame. Now on the monthly, what we can see. Now immediately from a monthly perspective, we can see two very important things. We can see that the market had created a very strong structural support area at this zone, creating this rejection to the upside. The market then broke below the area and then broke above this zone, creating basically a fake breakout of the area. In fact, after an area is broken to the downside, after a structure level is broken to the downside, this previous support is supposed to be turned resistance here. However, the market failed to respect this resistance and broke above the area, going and creating an equal high. Now, when you see something like this, you actually expect an inverted head and shoulders to develop. Why you expect it? Because if you have an impulse correction, lower low, equal high, and then the market from this equal high creates a move to the downside here, obviously, this is an inverted head and shoulders. Therefore, you expect the market to find support at this previous left shoulder area, which is now again turned support. That is the reason for which, after the market created a retracement back to this support, the market respected it multiple times with 3 touches and 3 rejections. And currently the market is trying to create this inverted head and shoulders and already rejected the zone multiple times. However, we see one very important thing. Here, the market tested its zone and rejected it to the upside with a green candle. Here, again, the market tested its zone and rejected it to the upside with this green candle. However, with this last test, the market created this candle here. Now, we spoke about this candle many times. If you have a candle that is red, okay, and has a wick which is long at least as much as the body, what you expect with the next candle is for the market to actually fill in this wick. You expect the next candle to be bearish to fill in this wick. And the reasoning is very simple. If you see a candle like this on the monthly, on the weekly, what you will have is an impulse and a correction. And you expect the continuation to the downside. And this continuation to the downside is exactly the next monthly candle that is supposed to fill in this wick. Going down on the weekly, in fact, what do we see? Now, from a weekly perspective, we can clearly see exactly as we have just said. We have the impulse and the correction. Now, if we want informations on a correction after an impulse, what do we have to do? We have to take our Fibonacci from the high to the low of the impulse. And what we can see is that the market just retraced exactly to the 0.618 of the Fibonacci taken on this impulse. So clearly the market retraced to the golden ratio from which it is clearly getting rejected to the downside. What we can also see is that this move to the upside was very expected. In fact, in our previous analysis, what did we say on GBP CAD? We said after the market has created this overextended formation, we definitely expect from here to see the market give us this move to the upside. We definitely wanted to see the market from here create exactly this move to the upside. And I will link in description this previous analysis in which I explain all the reasons for which we wanted to see this huge move to the upside from a weekly perspective. You find it linked in description. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next video. And if we go down on the daily, what do we currently see? Now, from a daily perspective, we can see that we had also spoken about GBP CAD after this move to the upside. First, we spoke about it when the market was here and we expected this move to the upside. And then again, I spoke about GBP CAD when the market was here. And what did I say? I said, here we have a nice W formation testing previous support and now turn resistance. And I made a full breakdown explaining all the reasons for which from here we wanted to see this move to the downside. And again, that is exactly what the market did. And I will link also this previous analysis in description so you can go and check it out for further reference and more free education. But what is the next opportunity for GBP CAD? Now, as we have just seen on the monthly, we would like to see the market fill in that wick. However, we also know that on the monthly we have this support. Therefore, we could expect the market to go and test this support, filling in the wick on the monthly and then rejecting the support to the upside. Since also on the weekly, we have an impulse, a correction, an impulse pattern to the downside, as we have already seen. So from the monthly and weekly, we can expect the market to give us a move to the downside to go and test this weekly and monthly support area. However, on the daily, there is a problem. Why there is a problem? Even though we would like to see the market reach this area, on the daily time frame, we do have daily support at this zone. Why we have daily support at this zone? Because we have previous daily resistance, which is now turned support here, and again support at this zone. So how we will be approaching a situation with students in which we have a monthly and weekly bearish target. However, on the daily, we still have support. Now, before I show you that, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. Now, what we can see on the pound is that with the last report, hedge funds have opened 11.4K short positions. So a massive amount of shorts getting added on the pound from an institutional perspective, with 4.2K longs getting closed, bringing the net positions at minus 12K. So we went from having positive net positioning all the way up to having plus 6.5K net positions, all the way down to having again negative net positioning with more shorts than longs. In fact, we have 51.9K short positions and 39.2K long positions. So definitely the pound is quite bearish. And if we go and see what we have from a CAD perspective, we can see that on the CAD, we have actually seen net positions increasing, meaning that the CAD is getting stronger. In fact, what we can see that we went from having minus 33K net positions all the way up to having minus 18K net positions. So definitely an increase in the net positioning with a lot of longs getting added. In fact, we went from 17 to 21K and shorts getting closed from 53 to 40K. So definitely exactly what we want to see, a weak pound and a strong CAD. However, as we said earlier, until the market will be above this daily support, obviously we cannot be looking for any shorts. So how we will be approaching this situation with students? Now, if the market will break below this support, the market will create an M formation. After an M formation, what do you expect? You expect the market to give you a move to the upside to complete the pattern at the previous support, which is now turned resistance. So what we will be doing during this move to the downside is waiting for a potential longing opportunity. So during the move to the downside with students, we will be monitoring price action from a 4-hour perspective. Why 4 hours? Because as usual, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame for confirmations and entry is the 4 hours. So during this move to the downside, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the completion of this formation at the neckline, aka the previous support now turned resistance. However, after the market will have completed this formation inside of here, that is where we will be looking for another opportunity with students. In this case, we will be waiting on the 4 hours for a shift from a bullish market to a bearish market. And as soon as that will happen and the market will provide to us one of our valid entries, we will be taking a beautiful short with a good risk to reward and good probabilities for the move to the downside and for the market to complete the monthly and weekly patterns as we have explained at the beginning of the video, to go basically and fill in that monthly wick and complete the weekly impulse correction and impulse pattern to the downside. Obviously, if the market will from here just reject this daily support, then this scenario is not valid anymore and we have to adjust to the new market structure because, as usual, as traders, we have to be always adaptive to the ever-changing market conditions. So only if we will see the break of the structure, then we can start to look for these opportunities. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies and then you trade them live with me. In fact, every single day I give you a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all questions that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out and I will see you in.